What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So as mentioned in my previous video on the Macroeconomic channel, we had the possibility of a slight breakdown below our bull market trend line, imitating the price action of September 2023 and April 2025. Even though the price action looks scary to many, we're still holding this long-term support zone I've had in my chart for a very long time at this point. Wicks went below it, and we even got a few closes on the floor of the range, but it is still holding as of right now. This zone is of course formed by the previous resistance zone highs, and more specifically their wicks. It is hugely important for determining whether we're still in a healthy uptrend or not. Now we're fighting the line from the underside and thus have to hope it won't turn into meaningful resistance. This is also what happened last time. We retested it and got rejected by it a few times, but then managed to regain it as support, allowing for a large rally to ensue. This is what we have to look out for if we're anticipating a bullish scenario. A definitive rejection would definitely not look good, especially considering how we're starting to run out of time now that we're in Q4 of year 4 of this cycle. The good thing is that everything in the macro picture still looks healthy, despite how frustrating this market cycle feels. Our 50-week moving average support line held very nicely, just like all the other retests of this cycle. It looks like this is a pretty important support line in this particular market cycle, serving a similar role as the 20-week moving average used to serve when the growth rate of Bitcoin was more exciting. Now let's look at our other charts and indicators to find some more clarity. So when looking at the DXY versus Bitcoin charts, it's clear that we are repeating this pattern over here. In the previous cycles, we have always had a little bounce, like this kind of final dead cat bounce before reaching the final bottom. And this is what I think will happen this time as well. And after that bounce, we'll probably make a lower low again for the dollar. Bitcoin, on the other hand, is consolidating and will probably go back up again soon. When looking at CME futures, you can see that we have a new gap here. So this is going to be interesting to see. Are we going to come back down to fill it during some sort of rejection of this trend line that we have? Or are we just going to ignore it and then fill it perhaps in the next bear market? We'll have to see about that. But it's probably more likely that we'll have some sort of pullback again before going back higher. So we'll have to see about that. When looking at the unemployment rate, you can see that we're still hovering around these highs over here. As long as we're below 5%, then everything's still good. And let's look at the effective federal funds rate now. As you can see, the first rate cut has been printed over here, and we're starting to come down here. The interesting question is whether this cycle will be a huge exception, and we won't have some sort of recession when coming down aggressively over here, or we will just repeat history as many times before. So this would still line up potentially with a Bitcoin bear market, which is pretty convenient to have a bear market during some sort of recession. The other option is that the Fed has to keep the rates elevated for a long period of time, like during the mid to late 90s. So this could be the case if inflation is stubborn and they have to keep the rates elevated for a long period of time. Now let's look at some news. For our first piece of news, we have Circle testing its new ARC blockchain, and it looks like institutions are piling in. Circle has deployed the public testnet for its ARC blockchain, involving over 100 financial institutions and tech firms, including BlackRock, Visa, and HSBC. ARC aims to bring real-world financial activities on-chain, offering features like US dollar-based fees and sub-second settlements. The firm said its long-term goal is to decentralize ARC, opening up governance and validator participation. The move comes as stablecoins, a 300 billion class of crypto tokens tied to fiat money, are becoming increasingly embedded into traditional finance. Meanwhile, big banks and asset managers also explore using blockchains for moving instruments like bonds, funds, and credits, often called tokenization of real-world assets, for operational gains. So it looks like stablecoins will soon have more blockchain options and won't have to rely on chains like Ethereum anymore, potentially avoiding the high gas fees and slow transaction times that come when the blockchain is congested. Online infrastructure projects like this play into the US's plan to increase the dollar's dominance worldwide. For our next and last piece of news, we have the pardoning of the ex-Binance CEO, CZ. So you can probably already guess the tone of the article and the portrayal of CZ considering it's from CNBC. Yeah, there is corruption here, and this was obviously a case of CZ scratching Trump's back and then receiving the same favor in return. But the initial crime was blown out of proportion due to the extremely crypto-hostile administration before Trump. It is true that CZ willfully focused on Binance's growth and user freedom instead of complying with KYC laws, but at the same time, that is kind of the libertarian worldview. You do have bad actors who abuse the system and launder money as a result of more relaxed user restrictions, but you also have a ton of people who don't want anything to do with invasive and annoying face scans and everything else that comes with your typical over-compliant exchange. A lot of the laws in the world are also ridiculous, and US customers should not have been barred from using an exchange that the rest of the world was able to use in the first place. It is not the government's job to allow or disallow things like futures or altcoin trading, in my opinion. Obviously, CZ's main motive was to make Binance the most dominant crypto exchange and make a ton of money in the process. But that is what every business wants to do. Cash can be used for illegal transactions and so can Bitcoin, but that's not a reason to embrace a police state enforcing a digital prison system that wants to make all these custody and transaction methods illegal. When you go to a store, it shouldn't be the cashier's job to decide whether you are on the government's naughty lists and permitted to purchase something or not, unless you're dealing with a minor, of course. When looking at the M2 money shift, you can see that Bitcoin is still stalling while the M2 money shift is going steadily higher. This kind of sucks, but we still have around 2 months to catch up because things could theoretically still be very bullish until the end of December at least. And the money supply is not even doing that bad right now. Who knows if it will put in another high. So when comparing the S&P to Bitcoin, you can see that the S&P is on an absolute tear. It's putting in massively higher highs, as you can see, while Bitcoin is still stalling. I do believe that this inverse correlation here cannot last forever, and Bitcoin will have to catch up at some point. So most of you probably already know about gold's massive rally to the upside, and people have been really disappointed in Bitcoin's price action in comparison because it's pretty ridiculous when you have something like gold outperforming Bitcoin. But I do believe that Bitcoin is simply lagging behind that, and gold was simply a leading indicator. That's something that happens quite often actually. Gold typically has moves first and then Bitcoin follows. And if something like this were to repeat for Bitcoin, then we could break out to the upside over here and have a nice rally. Obviously, I don't think the proportions will be the same. This rally was really very large compared to this range over here, but you get my point. And yes, typically this is a bearish pattern, but it's also a consolidation pattern. And in the case of gold, it broke to the upside. This here is an example of gold topping out first and then Bitcoin following. So something like this could easily happen again. When looking at Google Trends, you can see that interest in Bitcoin is still very low, which is to be expected because I can see this from the attitudes everywhere online. People really hate Bitcoin right now. And even though we're still relatively high up there, above 100,000, interest is at these lows over here. And if we were to go higher, maybe top out at the end of Q4, maybe even in the beginning of next year, then we could possibly spike above 50 at least, but we'll have to see about that. Let's see if we still have 4-year cycles. So when looking at the crypto fear and greed index, you can see that Bitcoin reached extremely fearful levels. It reached the mid 20s or so, which is very rare. The last time we did this was over here, and then we had a massive rally again to the upside. So as mentioned before, when looking at the Bitcoin dominance chart, you can see that Bitcoin is having a little bit of a rebound here, which is quite similar to some of these earlier market cycles where Bitcoin had this last rebounds before the dominance completely collapsed. So that's something that could happen again this time. And in that case, we could have a relatively late altcoin season. ETH is still challenging its all-time high region over here and building something that looks like a bull flag. So this does not look bearish at all as of right now. As you can see, the current support area is the previous top region here. We had a triple top over here. So as long as this bull flag doesn't collapse and turn into something different, everything is still looking golden for ETH as well, for the ETH bulls. ETH BTC is building a similar bull flag, as you can see. So this is pretty interesting. If we were to retest this region again, I would definitely be a seller because this is a massive resistance area. So regarding top predictions, it's still a little bit too early to tell. First, we need to defeat this support turn resistance line and put in a new high. But Bitcoin can sometimes have pretty impressive moves in even a few months. 140 to 150,000 would be a very nice range already. Anything above that would be beautiful. It's still a little bit too early to count our chickens, however, because we still have a lot of work to do. We aren't anywhere near those levels that I mentioned, and Bitcoin really has to pick up its pace in the coming few months. Theoretically, even if the top happened early next year, it could still be a 4-year cycle because we usually say that there's a 3-month range for the tops. They can happen in November, December, who knows, maybe even in January. The closer we get to the end of Q4, the higher the risk gets. So that's where I will be laddering out. And obviously I will update all of you guys as well and tell you when I'm going to be selling. But so far I'm still holding. Laddering out is a really good strategy as opposed to trying to predict the exact top. The probability of doing that successfully is extremely low and most likely you'll end up holding your bags. So laddering out allows you to stay calm. Every time the price goes higher, you sell some more, and that means you can make some more money. If Bitcoin just keeps hovering around the median power law, however, things could be a little bit different this cycle, as Giovanni thinks. So we'll just have to see what the price action looks like in a few months. By the way, thank you very much for all of the positive comments on my last video. I'm really grateful for that. And I'm going to try to start uploading these videos a little bit more frequently now. This is Saverio speaking, and as always, thanks for watching. You guys know my stance on the importance of self-custody. However, there are situations where you need to use an exchange for trading or as a crypto on and off ramp. There are also plenty of people who should still reap the benefits of owning Bitcoin, even if they don't have the technical expertise required for self-custody or exchange-based trading. This is where today's sponsor, Caleb & Brown, comes in. There's nothing more infuriating than having your money stuck on an exchange and being met with an AI chatbot instead of real customer support, which is often lacking as exchanges try to cut costs. Caleb & Brown, based in Australia, solves these problems by storing your crypto in cold storage, eliminating hidden fees, and assigning you a dedicated broker to assist you personally. You can even call your broker to execute a trade for you while you're relaxing on a beach. That's how easy it is to use Caleb & Brown's services. Use the referral link in the description to sign up now.